now. Hi, I'm Bill Westmacott, the founder of Fivefold Financial, and have a very special guest today. He's actually a friend, a business colleague, and he's also the founder and owner of Solid Financial Solutions. And he's extremely knowledgeable on precious metals and hard assets. So what I wanted to start with, Brad, is asking you kind of a little bit about your career path. I know you grew up in Alberta, kind of on the farm, and then sort of how that transition happened to where, you know, you're now educating people about precious metals and hard assets.
Sure. Well, I grew up on a farm just north of beautiful Red Deer, Alberta.
Yeah.
And I actually started my investing career, I guess you could call it, out at the young age of about 9 or 10 years old.
Wow.
I actually converted my birthday money and chore money into a group of little piglets when those piglets grew up to be full-grown pigs.
Yeah.
And then I traded those pigs in for cows and so on and so forth. And I'll never forget the day, Bill, I had this little cattle herd growing quite quickly, actually. And my dad took me aside and said, "Hey, you know what? This isn't working too well." And I said, "Why, what's the problem?" And he said, "Well, your cattle herd's growing quite quickly, and I'm paying all the feed and taking care of all the cattle. So I think it's fair if we do, you know, a third of your cattle go towards feed and expenses, and the rest is yours." And you know what? I should have took him up on that deal and that offer, Bill, but I decided at that point it was time to diversify outside the family farm. So I had started buying stocks and mutual funds at age 13. I was 13 by then, and started to diversify outside the farm. I should have took that offer because little did I realize today it's about 50-50. So it would have been a good deal.
Yes.
So that's when I had started in stocks and mutual funds. And I think it was by age 17, I purchased my first home, and I could pull it off because in the morning I worked on the dairy farm that I grew up on from 4:30 to 8:30, and then took the bus to school, and then from about 4:30 till 8:30 at night worked there again. So by almost having a full-time job and being able to have a classmate that ended up being a roommate, that's how I pulled it off in high school. And then from there, my wife and I got married. I was just 20. She turned 19. We built our first home. And by 25, I had paid off our first home, any line of credits we had, vehicle, etc. I built a small business that I had paid off as well. And that small business paid $5,000 to $7,000 a month income. So essentially we were making $5,000 to $7,000 a month, whether we worked or didn't work, and all debts and bills and house paid for. So at 25, we were free. And then I'm 40 now. So from 25 to 40, I've been sharing with people exactly what I do personally for investing. And if it makes sense to them, great. And if it doesn't, that's okay. We keep it low key and simple because if something's that good, it should sell itself. You shouldn't have to push it.
Yeah.
And that's how we built our business over the years. And it sure hasn't come without its challenges. If I could share the most valuable lesson, Bill, I've ever learned since I was 13 in investing, it's this. And you can ask my little guy, Lincoln. He's not so little anymore. He's 13 years of age. If you ask him, you know, what's rule number 1 to investing money, he would say, Bill, he'd say, never, ever, ever lose control of your money.
Interesting.
And if you were to ask him how come, he'd say, well, Bill, because somebody might take it and mismanage it on you because nobody cares about it as much as you do. You had to work for it. And if you ask him what's rule number 2, he'd say, Bill, never, ever, ever, ever forget rule number 1.
Slightly different rules than Warren Buffett, but really actually not so far off.
Yeah. So that's my short little bio if I were to share one. And one of the most valuable lessons I have ever learned in my entire life when it comes to investing, I'd say 9 times out of 10 or more, when we've ever had issues, it's because of that reason.
Okay.
So I'd like to add as much value as I can right out of the gate, and that would be certainly one of them. So
Interesting. Hey, um, you've built a successful business, which I think spans all over Western Canada and maybe beyond, as far as your influence to educate and help people. And I know at some point you got very interested in actually physical gold and silver as a asset class. And I know you have other hard assets that you've been involved with, but tell me a little bit about that journey, how you got involved in that.
great. Well, I'd like to say I'm a student of history, financial economics, and wealth cycles. So I like to study wealth cycles. And why? Because if we understand a wealth cycle in history, we can almost predict, in a sense, our financial future, because we know then how to buy low, sell high, buy low. I mean, it's a simple concept that we a lot of people talk about, but the reality is that very few people live it.
Correct.
And I think that's why 95% roughly of the world's wealth is controlled by less than 5% of the people, is because a very small percentage of people understand what a wealth cycle is. And a lot of us have maybe rode up a wealth cycle without even realizing it.
Yeah.
The sad reality is a lot of us have rode a wealth cycle down. When I was 17 years old and bought my first piece of real estate, I happened to catch a wealth cycle, Bill. Didn't even realize that's what it was, but made a lot of money in appreciation a little guy should not have made. Not because I knew anything at the time, but because I wrote up what's called a wealth cycle.
Okay.
And so in studying history, I've seen various indicators that led me to believe that one of the next wealth cycles we're approaching is in hard assets, one being gold, another being silver. So I actually got into that space several years ago because I saw that coming, and first got into that space because of the investor part of me. And then I thought, you know what, why not share this opportunity with my friends and family and business associates and clients instead of just do that on our own. So that's what started our gold and silver business, was first going there as an investor.
So when did that actually happen for you, Brad?
I think it was about 7 years ago.
Okay, where
Yeah.
you really caught it and then got involved yourself and then started educating other people.
Yeah, yeah,
Awesome.
exactly. Yeah.
So I know you, like myself, spent a lot of time trying to understand markets, where things are going, again, back to market cycle, macro, microeconomics. If you had anything that kept you up at night or concerned you, individually or, for your people you try to help and support, what would they be today?
The things that keep me up at night?
Yeah, or things that really concern you in terms of the economic and financial global markets. What would be your top concerns?
Well, other than, as we discussed, rule number one,
Yes.
the other would be the fact that we're coming up against probably one of the greatest transfers of wealth we'll see in our lifetime.
Okay.
And many argue in world history because of a few things. Number one, there's never been 7+ billion people on the planet before. Also, a reserve currency of the world, i.e. the US dollar, that's on the verge of collapse or trouble, correction. And also with the markets being overinflated. I mean, when you add a few $1 trillion in just a few days, it's over 7 trillion now, just through the COVID situation here. Yeah. I mean, people have to ask themselves, can we get away with that? Or is there a consequence that follows?
Yeah.
And there really is a consequence that will follow. If you study history, this isn't complicated stuff. This is very simple. The more money you print, the less and less it's worth.
Correct.
The US government has printed more money in the last 2 years than the prior 100. Yeah. And if you study any nation that does such a thing, you'll find out that there's a life expectancy that comes with their currency. And what I'm concerned about, Bill, is the many, many people out there that are holding currency, they're holding cash, they're saving money, and they have a majority of their money in the market. You know, it's interesting to me, you know, I deal with people on a day-to-day basis, and I find it interesting how people are losing money and not making money in the market,
Right.
yet the market is hitting an all-time historic world record high.
Right.
Why is that? How come people aren't asking that question? How come we're seeing the market at historic levels we've never seen before in history, but yet we're not the ones making the money? What's going on?
Yeah.
Well, it's just the simple, you know, the rich get richer and the middle class and the poor, you know, get poorer, and it's rigged. And so we have to ask ourselves why, how, and what we need to do to hedge the volatility that's coming. So that's my biggest concern. Is I'm concerned, Bill, especially for the baby boomers, you know, because here they are nearing retirement, and their pensions, their RSPs, their 401ks, they're at risk. Their
Yeah.
checkings, their savings, the value of their homes are at risk. And when you near retirement with this kind of volatility, it can be scary.
Yeah. No, those are all valid points. You know, I would echo your concerns. I mean, we wasn't too long ago where, you know, experts were quoting 260 trillion of global debt, and many are projecting it'll be over 300 by the end of this year. It's staggering, and
Yeah.
I would echo those concerns. So, hey, why don't you share just any closing thoughts that would be helpful, you know, to our viewers, and just maybe something we've missed so far that's important to you that you'd like to share, Brad.
Hmm. Well, there's a lot. That's a loaded one there, but to try to keep it as simple as I can. Obviously, there's a lot of noise out there.
Yeah.
There's a lot of noise, and really, I think it's wise to turn off a lot of that noise. You know, everywhere you turn, everywhere you look, whatever you listen to, there's always somebody with an opinion.
Yeah.
I just like to keep it simple, and I like to learn from history. You know, one of my favorite sayings, Bill, you've probably heard me say this before, it's my favorite. The thing we can learn from history is that people don't learn from history.
Yeah, it's true. Yeah.
And one of my mentors, I like to say, is King Solomon. You know, and you know, he talked about how, you know, one of the wealthiest men that ever lived. What's happened before will happen again,
Yeah.
and there's nothing new under the sun. Life is simply cycles, and so the problem is that the people that have that education, that knowledge, that experience pass away, and instead of sharing that information and passing on that baton, you know, that wisdom is lost.
Yeah.
And so you have another generation that comes up and is going through the same things. So it won't necessarily repeat perfectly, but it does rhyme. And what we're going into is what's happened before, but it'll be much greater. You know, in the 30s, they talked about the Great Depression. I believe what we'll refer to this that's up and coming is the Greater Depression.
Yeah.
But again, it's not about doom and gloom. You know, in the 30s, we know a lot of people were wiped out financially. We all know the story, most of us. I think the stock market dropped on average 89 to 90% to be exact.
Yeah.
Real estate, if you check that out, dropped anywhere between 40 and 90%, depending on the location. So it was very severe. But the thing we don't talk about is that there was also never more millionaires ever made in recorded history than in the 30s. But see, that group of people, they had the eyes to see the opportunity,
Yes.
but they also had the courage to take action.
Yeah.
So if I were to leave anybody with anything, it'd be just shut off the noise and the distractions. Learn and study history. I know, Bill, you're great at this, about pointing people in the right direction, where they can get that kind of knowledge so that they can make an informed decision. Because with knowledge and understanding comes clarity.
Yes.
And with clarity comes an informed decision that a person can make. So that's what I would suggest, because we're in some crucial, volatile times. And if there's ever been a time before where we need to do some research and really dig in deep so that we're well positioned for what's coming, now is the time. In fact, we're fortunate, Bill, that we even have this window,
Yes.
because if the Fed decided, you know what, we're going to just keep our nose out of this, we're not going to manipulate things or money print. We're just going to let things go as they should, which is called a free market, which they should have. If they let it be a free market, this would have happened a long time ago, this correction, this crash, and you and I wouldn't be having this conversation. We'd probably have another one.
Yes.
But thankfully, in a strange way, it's almost a bit of a blessing that they have manipulated things to a degree, because what this has done is caused a greater window of time for you and I to prepare our families even further, but also to help others.
Yeah. Well, that's awesome. I really appreciate your insights, Brad, and I know you're very committed to, not only protecting your own family, but also helping others. So I really want to appreciate you and thank you for taking this time this evening out of your valuable family time. And I wish you and your family well, as we are in a unprecedented time in human history, as they keep reminding us. But thank you again for your time, Brad. I really appreciate it, and look forward to talking to you soon in the near future.
Well, I appreciate the opportunity, Bill, and also your passion to help people and point them in the right direction. It's much appreciated.
All right. Thank you so much, Brad.
Okay. Bye-bye.